Hey everyone, welcome into our latest TDR Podcast. I am your host, Shad Dales, and today we're covering one of the most high-stake financial stories unfolding in real time, and it's the growing rift between President Donald Trump and Federal Reserve Chair Jerome Powell. What else is new? Right now, Trump is turning up the heat again, calling Powell clueless and accusing him of choking the U.S. economy by refusing to lower interest rates. Meanwhile, cracks are forming inside the Fed itself. Another top Federal Reserve governor is now breaking ranks, signaling support for a rate cut as early as July. So the key questions now are, 1, why is Powell resisting pressure to cut rates? 2, why is President Trump so intent on lowering them and fast? 3, what is Powell's fear of stagflation all about? And 4, if Trump does decide to fire Powell, what happens to the markets? With all this, let's break it down. A lot of moving parts here. So let's first begin. If this sounds familiar, it should. President Trump has a long and public history of clashing with Jerome Powell, even though he originally appointed him to lead the Fed back in 2018. Oh, how times have changed. But here in 2025, the tension is boiling over again. Just last week, Trump lashed out at Powell in a press conference and on Truth Social, calling the Fed's policy, quote, economically insane, end quote, and warning that Powell's refusal to cut rates is threatening the recovery. And it's not just words. Behind the scenes, White House insiders are reportedly floating legal options to remove or sideline Powell, a move that would trigger a major showdown over central bank independence. So why is Trump this focused on interest rates? For Trump, the argument is simple. Cutting rates, it fuels growth. Lower interest rates makes it easier for businesses to borrow, for consumers to spend, and for markets to rally. They lower the cost of capital and stimulate the economy. And that's exactly what Trump wants heading into 2026. Trump is betting on a booming U.S. economy to drive confidence and deliver political momentum. He's pushing hard for aggressive monetary policy to support his broader economic agenda, which includes tax reform 2.0, reindustrialization, and energy independence. And let's face it, he's not alone. Major players on Wall Street, from real estate developers to private equity, have been quietly backing Trump's call for rate cuts. They see it as the spark that could reignite risk-taking and unlock capital. But Powell sees a different task, and that brings us to this side of his story. So the big question is, why is Jerome Powell budging? The reason why is because he's worried about a scenario that most people in Washington would rather not talk about, and that is stagflation. That's where the economy stalls or slows, but inflation stays high. The reason why it's important because it's a nightmare for central bankers, and Powell's worried that cutting rates too soon could rekindle price instability, just as the Fed has started to get inflation back under control. In his latest comments, Powell acknowledged the softening in consumer spending and hiring, but made it clear the Feds need more data before pivoting. He wants to see inflation sustainably trending towards the 2% target before he makes any move. And that cautious stance is creating a divide, not just between Powell and Trump, but inside the Fed itself. Just this past week, Federal Reserve Governor Lisa Cook publicly signaled support for a rate cut in July, citing weakening labor data, rising credit stress, and softening consumer sentiment. That makes her the second top official in the Fed in recent weeks to say it's time to consider loosening policy. And really, that matters. The Fed operates on consensus, and when multiple governors start speaking out in favor of rate cuts, it signals real debate behind the scenes. It also gives political ammunition to Trump, who can now say he's not alone in criticism, that even some of Powell's colleagues are questioning his strategy. In this dynamic, it's political pressure from the White House and internal dissent at the Fed. It sets up a political explosive situation heading into Q3. So the big question now that many of you might ask, could President Trump actually fire Jerome Powell? Technically, it's complicated. The Fed chair is appointed for a 4-year term and cannot be removed without cause, meaning misconduct or clear dereliction of duty. Disagreeing on interest rates doesn't count, but that hasn't stopped Trump from testing legal boundaries before, and there are already reports that White House legal terms are exploring ways to either demote Powell or replace him with someone who's more aligned with Trump's views. So if that happens, the implications could be massive. Investors would have to reprice central bank independent risk, which could create market volatility, spike bond yields, and send mixed signals to global allies about U.S. monetary credibility. We've seen this movie play out in countries with weaker institutions, and the markets, they usually don't like it. So staying on that note, the markets right now, they've been cautious. Bond yields have pulled back slightly on expectations of a rate cut, but the Fed funds future still shows uncertainty about timing. Stocks, meanwhile, have been grinding sideways, caught between optimism about about looser policy and concern about Fed dysfunction. What investors really want is clarity, and they're not getting it right now. You've got a president demanding cuts, a Fed chair warning of stagflation, and governors breaking rank. Add in global risk factors like trade tensions and oil prices, and it's easy to see why fund managers are treading carefully right now. This really is a high-stakes moment, not just for the Fed, but for the entire U.S. economic narrative. So here's the bottom line from where we sit today. 1, Trump wants growth, and he's going to fight hard to get it, even if it means political warfare with the Fed. And on the other side, Powell wants to avoid a repeat of the 1970s when inflation spiraled out of control and rate cuts came way too early. And also keep in mind, the Fed as an institution is facing a stress test of its own independence. This isn't just an economic debate, it's about who controls the monetary policy in the world's largest economy. And really what that means from housing to credit markets to global liquidity. So a lot of you may ask, what happens next? Do we get a rate cut in July? Does Trump push Powell out of the way, or does the market force the Fed's hand with more economic softness? The only clear thing I can say right now is we're headed into uncharted territory. Maybe not the answer that you want, but there's a lot of moving parts here. One way or another, we're going to find out soon enough. And with that, that's a wrap for today. If you want to know what's going to happen next, let us know in the comments below. Let us know what your predictions are. We'd love to keep this conversation going. So again, we'd love to get your feedback. Also, if you have time, make sure to give this video a like, share it with your network, and greatly appreciate it if you could subscribe here to our YouTube channel. That's it for today. And like I always say, stay open-minded, stay connected, and I'll see you next time in our latest TDR podcast. I'm your host, Shad Dales. Thanks again for watching.